So now let's begin with your next topic in your second chapter, that is material cost. You will have two parts as to how you prepare your stores ledger account. That is, first part will be your LIFO method and a FIFO method, that is first in first out method, and next part will be your LIFO method, okay, that is last in first out method. Now in order to prepare the stores ledger account, okay, the first thing you need to know is the different methods of preparation. That is, you will have various methods. You have 4 methods: actual cost, average cost, current price method, and national price method. Now under your actual cost, you have specific price, first in first out method, last in first out method, highest in first out method, base stock method. Average cost, you have simple average price method, weighted average price method. Now under your current price method, you have replacement price method, next in first out method, okay. Now under your national price method, you have standard price method, inflated price method, and reuses price method. Now under your first in first out method, this particular method assumes that there are materials. The materials are present and they are used in order in which they are received in stores. Whatever the order they are receiving in terms of stores, and in same order they are using it in stores as well, okay. Now here the issues are priced in the chronological order of receipts based on date wise, okay, chronological order based on date wise. As a result of closing stock will be valued on the basis of the chronological order. Now what are the advantages and disadvantages of first in first out method? First in first out method is an easy and simple method. This method agrees with the recent purchase prevailing in the market. It is a logical method. Here, for the price fall in the market, this method gives better results. It is suitable when materials are slow moving, bulky, and with heavy cost. Okay, material cost represents actual cost which should be charged to product process. When materials are purchased, price at less. When there is price hike in market, profit is inflated, and this is beneficial to the company. So this is all self-explanatory, okay. You can go through the advantages as well as the disadvantages. Now let's see what are the disadvantages. Now disadvantages are there will be clerical errors while calculating, then price continuous fluctuation, calculation becomes tedious, which means it becomes a time consuming process. It overstates profits. Okay, price continuously keeps fluctuating and changing frequently. Then old materials which are returned to stores from production centers will be sent to other production units as fresh units. So now let's look into your first illustration problem under your FIFO method. Read the question very carefully. Okay, prepare the stores ledger under the first in first out method. Your method will be specified, okay, which method you have to prepare, whether it is first in first out or last in first out. Now on 1st January 2020, opening balance 200 units at rupees 25 per unit. Okay, now there are receipts and issues which are given to you. Receipts are 4th January 2020, 200 units at rupees 24 per unit. 10th January 2020, 150 units at 23 per unit. 18th January 2020, 100 units at rupees 23 per unit. 22nd January 2020, 100 units at rupees 23.50 per unit. These were your receipts. Okay, now what are your issues? What are you issuing? On 5th January you're issuing 250 units, 12th January you're issuing 200 units, and 25th January you are issuing 250 units. Now in order to solve this particular problem, you have a particular format. Now for this particular format also you have to follow the chronological order. Suppose now 1st January is there. Next, see what date is the nearest. It is 4th January. After 4th January you have 5th. After 5th you have 10th. After 10th you have 12th, 18th, 22nd and 25th. You need to go in a date wise order followed by the particular date. Now you will have GRN as well as MRN. Now what is GRN? Is nothing but goods receipt note. MRN is material receipt note, while receiving material and while receiving goods. Now let's look into the solution of this particular problem. Okay, now in order to move forward with the solution, while moving forward with the solution, you have to prepare. This is the format. Okay, you will have to write on top, that is stores ledger account under FIFO method, date, particulars, receipt, issue, and balance. Under your receipt, again it is subdivided into 3 columns, that is units, rate, and amount. Issue column, units, rates, and amounts. Balance column, units, rates, and amount. Now I will not be able to show you the complete question and the solution in the particular problem, so please kindly adjust. So when you see in the question, it says 1st January, the opening balance is given to you 200 units at rupees 25 per unit. So in the dates column, write down 1st January 2020. Okay, 1st January 2020, balance brought down. To balance brought down in your particulars column, to balance brought down. Now this columns will remain empty. Okay, this columns will remain empty. Only in your balance brought down column you will write what is the units you're bringing down. 200 units at 25. Okay, 200 units at the rate of 25. So 200 units into 25 will give you 5,000 will be your amount. Okay, 5,000, 200 into 25. This is your balance brought down. Next, what does it say? Next, look at to the next closest date. Okay, after 1st January, you have 4th January. You are receiving in the receipts column. You are receiving. It says 4th January, 200 units at rupees 24 per unit. So this is GRN. You are receiving, right? Receipts. GRN, good receipt note. So take down the date 4th January 2020, goods receipt note to GRN number. Okay, to GRN number. How much are you receiving in your receipts column? 200 units at rupees 24. 200 units at rupees 20 at the rate 24. 200 into 24. Okay, 200 into 24 is 4,800. 4,800. Now after you're done solving this, bring down this balance here again. Okay, bring down the balance in your 4th January date, that is 225 units of 5,000 plus this balance will be carried down, that is 220 at the rate 24, which will give you 4,800. Now let's look into the next date which is nearest, which is given to you. It is 5th January 2020, wherein you are issuing 250 units. Now when you're issuing, you need to be very careful. You need to issue out of this particular balance which you have. So I will show you all. On 5th January 2020, you are issuing to MRN, material receipt number. You are issuing 250 units. Please note down here, okay? Please note down so that you do not get confused. 250 units. Now, how will you issue this 250 units? From this particular balance, okay? The balance which you've brought down earlier, from this you will issue 250 units. Now, you can see you only have 200 units at the rate of 25. Whereas 50 more you require in order to issue 250 units. Again, you will have to deduct it from here, okay? So, bring down this particular balance in your issued column. In your issue column, issue 225 at the rate of 25, that is giving you 5,000. Then again issue 50 at the rate of 24. 50 at the rate of 24. Why are you issuing only 50? Is because we only require 50 more units. 200 is already there, plus add 50. Okay, from this again, if you minus 200 minus 50, you will be remaining with a balance of 150. Okay, so 250 at the rate of 24. At this rate only you have to issue 50 at the rate of 24. 50 at the rate of 24 will give you 1,200. 1,200. Now from this particular rate, how much more balance is remaining? It is 150 which is remaining, right? 150 is still remaining. So 200 minus 200 minus 50, you will have 150 which is remaining at the rate of 24. 150 into 24 is 3,600 will be your balance. Okay, out in this particular line you need to take down. In this particular row, the amount with balance which is left out you need to take down. Then after which, look into your closest date, that is 10th January 2020. Okay, take down the date, that is 10/1/20. What are you doing on 10th one? You are receiving, that is GRN 150 units at 23 per unit to GRN number. Okay, you are receiving 150 units at 23. 150 at the rate of 23. 150 into 23 is 3,450. 3,450. Now what was the balance earlier which was left? 150, right? Bring down the balance. 150 at the rate of 24, which is 3,600, and take down this balance, that is 150 at the rate of 23, that is 3,450. Okay, now look into the next date, closer date which is given, that is 12th January. 12th January, again you are issuing. How will you issue? Look, 12th January you are issuing 200 units. You can issue this whole, plus you will be left with another 50 units. Again when you are issuing, you will have a balance of 100. Okay, now on 12th January 2020, you are issuing to MRN number. You are issuing 200 units. Okay, 200 units. This columns will remain empty. Here you are issuing 200. Okay, but you cannot issue complete 200 because your balance is 150. So 150 into 20 at the rate of 24 will give you 3600. Then again 50 at the rate of 23. 50 at the rate of 23 will give you 1150. 1150. Again 50 minus 50, then you will be left 50 minus 100, you will be 50 minus 150, you will be left with 100 units of 23 at the rate of 23. 100 into 23, which will give you 2300. Okay, then again, which is the next nearing date? It is 18th. It is 18th January. Now 18th January you are receiving 100 units at 23 per unit. Okay, 18th January 2020 to GRN number, you are receiving 18th January 100 units at 23 per unit. 100 units at 23. 100 into 23 is 2000. Okay. So 100 into 23, 100 into 23 will give you 2300. Okay, 2300. Now in your textbook you have a slight error, that is a printing mistake. It's given as 20 as the rate, which is wrong. Okay, you have a printing mistake here. Now what will you do? You will bring down the balances, right? The earlier balance, it was 100 into 23, which was 2300, plus this 123, that was 2300. Okay, that is 2300. Now what will you do next? Next, see which is the closest date which is given. After your 18th, you have after 18th here you have 22nd January again in your receipts. Again you are receiving. So take down 22nd 120 to GRN number. Now how much are you receiving on 22nd January is 100 units of 23.50 per unit. 100 into 23.50 per unit, that is 100 into 23.50, that is 2350 will be your amount, 2350. Now bring down the balances. Now how will you bring down the balances? Earlier the balance was 100 at the rate of 23, that was 2300. Again 100 at the rate of 23, which is 2300, plus 100 at the rate of 23.50, 2350. Okay, your next amount, next date, what is the next date after 22nd is 25th, wherein you're issuing, okay, on 25th again you're issuing 250 units. Okay, 250 units you're issuing. Now in your issuing, now next is will be your issue 25th 1 to 20, that is 2 MRN. You are issuing 250 units. Okay, now 250 units you are issuing out of this particular balance. From here you will issue in your MRN column. Be very careful while you're bringing down your columns. Okay, just a minute, guys. Be very careful with your columns. Now in your MRN, okay, you're issuing 250 units. So under your issues column, okay, under your issues column, I hope it's seen to you all. Under your issues column, you need to first issue 100 at the rate of 23. Okay, issuing 100 at the rate of 23, that is 2300. Now how much more is left? That is again 150 is left. Then again you will issue 100 at the rate of 23. 100 at the rate of 23, 2300. Then again how much more is left? Out of this 100 you have to issue 50, because you have 250 units. Then again 50 will be your balance at 23.50. 50 into 50 into 23.50 will give you 1175. Okay, now what is the balance which is remaining out of this 100? It is 50. 100 minus 50, 50 will be your balance at the rate of 23.50. Again your balance will be 1175. Now finally, after everything is done, you have to close your balance. You have to bring down your balance. Now you have to bring down the balance. It will be on the last date of this particular month, that is 31st January 2022 to balance carried down. To balance carried down. Now what is the balance which is left? There is no balance here in these columns. There is no balance here left in the issues column. Now in your balance brought carried down column, you have a balance of 50 at the rate of 23.50, that is 1175. So this is your balance which is carried down. So therefore the value, okay, the value, therefore the value of closing stock, the value of closing stock on 31st December 2020 is 50 units at the rate of rupees 23.50 is equal to rupees 1175. Okay, I hope this particular solution is very clear to you all. Okay, please look into the solution very carefully. Please be very careful while you're bringing down balances, and when you're issuing please be very careful with the dates. Then again, be very careful when it is a receipt and when there is an issue. Okay, and how are you issuing from the balances, how you are carrying forward the balances. All this is very important. You need to do the solutions very carefully. Thank you for watching.